No, you're not seeing a ghost. This is The Trade. My name is Kyle Rodder in full live form, and it's fantastic to have your company for another week. And well, to kick off the trading week, Michael Gable from Fairmont Equities joins me live at the desk and in the flesh, it has to be said. Michael, great to have your company today. Let's crack straight into it because, I mean, our first chart's really going to set us up well and kind of answer, really the kind of broad question at the moment about market sentiment. The S&P 500, we'll get that chart up now, looking like it's reaching a really critical juncture.
Yeah, exactly. And, if the question is, what is it going to do from here? To be honest, I don't know. It is at a very interesting juncture. So we've got this situation where, as we can see, the market is back up underneath that downtrend line. I know there's a lot of lines here, but the straight blue line is clearly a downtrend line. The dotted curvy line is the 200-day moving average, and the solid one's the 50. So they're all starting to converge here. And again, look, I don't have a crystal ball. Is it going to break to the upside and follow through? Is it going to break to the upside and fail, or we're just going to fail from here? Don't know. But this week will be very interesting. And clearly, when you look at that chart compared to our market, I don't have a chart of our market. I mean, our market's just basically gone up almost every, I think it's only been down 2 days in the last 13, 14. So, big move up on our market. Clearly a bit overbought in the short term, and I think the next movement essentially will be guided by what the US does. So, yeah, key juncture. Wish I could say what it's going to do from here, but I don't. So what that means is you just have to be patient and just wait for whatever lead you get this week. But look, locally, yeah, our market's been doing pretty well. There are some potential opportunities, and we can cover those today.
Yeah, definitely. No, I'm trying and keep my trading to a minimum because I've had the tendency to overtrade in the past, but I've gotten short in the ASX 200 recently in the last few days, thinking that we're due for a bit of a pullback. But like you said, that level breaks in the S&P 500, I'm going to get fairly nervous about that one. But let's move on to a few stocks that you just alluded to we will be talking to today, about today. And we'll start with Coles because, well, actually you've got a pretty interesting setup here. Why don't you take us through it?
Yeah, so look, I mean, Coles obviously not the most exciting stock, but we do have, some of our viewers are looking to enter some well-known names like Coles. Interesting setup. So clearly, sort of last half of last year was dominated by that big sell down, inflationary fears, what it can do for the business and their costs. But as we could see in November, a very nice bounce off 16 up towards 1750, and then it's formed what looks like a bull flag. So I've got a couple of diagonal blue lines indicating that flag formation. We did break above that about a week ago, and now Coles is testing the prior peak that was formed across the end of November. So that breakout from the flag about a week ago was your first buy signal, in my opinion. Now, if it's just consolidating here and can hold above that breakout, you'd then be looking for an upside break above that horizontal dotted line, which is near about 1725. So it's one to keep an eye on. I think if you do get that upside break to a new high, then that's the next buy signal, and we'll see some sort of recovery in the Coles share price from here.
Yeah, okay, interesting one, especially as we're sort of trying to decide whether we start sort of moving more into defensive or how we sort of position in this market. Coles there. Another stock, interesting juncture. All right, next one we're going to look at is Wally now. And this just looks really bullish. It's broken out some new highs, key level of resistance seemingly broken through. So, I mean, are you sort of feeling fairly bullish, if I should say so, on Wally?
Yeah, this is a great chart. This is one we had in our newsletter last week. So as I've spoken about before on the show, I like to see these horizontal lines, these very clear levels of resistance and support. And Wally's is one that I've been keeping an eye on because it has been forming a very clear line of resistance. We could see the blue line, the fact that it's retested that on a number of occasions. This whole pattern that's been forming since mid last year, potentially an inverse head and shoulders, if you want to call it that, but we did get the breakout last week. Now, when you look at it sort of zoomed out here, it still looks like it's at the buy point. Of course, when you look at our broader market and how potentially overbought it is in the short term, I don't think you need to rush into Wally's. But if you get a little bit of a pullback and retest of that 1550 region, and then if the market's ready to get going again, that will be a nice entry point. In terms of upside targets, what's interesting with these inverse head and shoulder patterns is you often see the share price move in the order of magnitude of the depth of that head and shoulders pattern. So what I mean by that is, as we could see, the size of that head and shoulders is between about 1250 to 1550. So let's call it $3. Stick $3 on top of 1550 gives you a target potentially 1850. Now I do take those with a grain of salt, pinch of salt. Anything can happen, but yeah, still early days of the breakout. So I think this is one of the better looking opportunities out there.
Yeah, it certainly does, and I suppose that implied measured move there might be a handy guide to see where we might run to. We'll hopefully get an update on that one in the next few weeks from you when we chat next. But let's go to the next stock that we want to have a gander at, and that's Goodman Group. This one, another one coming up seemingly to a key level. Circling here, what are you indicating?
So what I like about, well, firstly with Goodman Group as a REIT, I've noticed a number of interest rate sensitive stocks have started to do pretty well again as markets start to lower their interest rate expectations for the year. So whether it's been technology companies like REA and Seek and so on, or some of the property stocks like Goodman Group, they've been coming back to life. In terms of Goodman Group, very strong performance since the start of January, like much of the market. But what was interesting was it rallied all the way back up to its prior peak, which I've indicated with the horizontal blue line. And again, when you see a stock test an old level, very interesting to see how it reacts. Do we get sold off sharply? Do all the bears turn up and dump it? Or can it hold in there? And so far, Goodman Group's been holding in there, which is why I've circled it. So this means it's potentially prepping for an upside break. Again, if our market's a bit overbought in the short term and decides to come back, let's see if Goodman Group goes back with it or if it just stays here. So I think as long as it holds above, say about 1850, the high 18s is basically the minimum there, then I'd just be waiting for that upside breakthrough about, I think it's around 1925, 1950. And then that's the next buy signal, and it should run up and retest the August peak, which is above 21.
All right, so set your targets there for 21 potentially if we do get that breakout. Now let's get to the last stock that we wanted to have a little gander of, and it's one that I probably don't track quite as much. So I really appreciate you bringing this to the table, but it's Evita Medical. And another one, it seems like we're getting a retest of that breakout. And also you've circled, I suppose, perhaps a period of consolidation there. Talk us through effectively that setup and how you would potentially play this trade.
Yeah, so this, I'm not showing what it's done in the last couple of years. I've only gone back a year, but this has fallen a long way. Potentially formed a base and ready to get going again. So the setup is sort of similar to what I described with Goodman Group, but this is on a longer time frame. The longer time frame means when you do get a break, you end up with a longer move. So essentially, we had a prior peak there in August, a slow pullback, followed by a very strong move in November. I don't have the volumes here on the chart, but volumes were really strong on the way up, which is good. And as you say, then just consolidated under that old high, which I've circled. So again, this is one that, when I saw it consolidating, it's just worth keeping an eye on, because when you do get an upside break, which is what we got last week, that's potentially your buy signal. Now today it is a bit weak. It's gone back to retest that breakout. So I wouldn't say today's the buying opportunity. Let's give it a couple of days or so, and as long as it holds up around these sorts of levels and doesn't fall all the way back towards $2, then yeah, you've got a very interesting buy here. Because again, if we look at the size of the prior pattern, so $1.50 to let's call it 230, 80 cents, stick your 80 cents on top of 230, could potentially bring it up to 310, which is that prior peak back in February on the left of the screen as your first line of resistance. So yeah, if it holds in for a couple of days, I think you've got to buy with a very good risk reward opportunity.
All right, there you go. So just to round things out just a little bit too, because we've got a few, I suppose, stock picks there or trade setups for individual stocks. We also saw just the way that the broader market is potentially setting up at that really kind of key level. Well, you know, the way you would approach this, would you kind of blend your views or strategies for both of those markets, in the sense that, you know, you're going to wait for that, you know, either breakout or failure of that level, and then you might, you know, execute these trades based on, again, what the you know, broader market is doing, or are you sort of ignoring that noise and just sort of playing each stock on its merits?
You brought up an interesting point at the start of the show, in that you're keeping your trades small, given the way the market is. And I think if you're looking to take on any of these opportunities now, you can't ignore the fact that the broader market is, you know, quite overbought in the short term. It might not pull back sharply, maybe it just goes sideways for a bit. But I think if you're having a go here, you just need to have smaller positions, keep your stops tight, or you just leave them for now and just let the market cool off, and then again observe how the individual stocks are faring. So you get a market that does this, but your stock only goes sideways. Well, that's a great sign, and then it gives you more confidence for the next opportunity. I mean, it is a, you know, in fairness to our viewers that are struggling so far this calendar year, it's been a tricky market. I mean, since the start of January, we've had this sort of V-shaped bounce, and there's been, you know, not many setups on particular stocks. But again, you don't have to trade, in my opinion, you don't have to trade every single rally there is in the market. When you look at all the moves that you get over the course of the year, you can, you know, let a few of them pass and wait for the better setup. So it is quite tricky, and I think, you know, even though these individual stocks look very good right here, it is high risk to be buying them now when the market's gone up like this and is overbought, as opposed to waiting for the market to cool off and having the stocks with a good setup. Bit of a long-winded answer, but yeah, if you want to participate, I think keep it small and keep the stops tight.
And that's a really great piece of advice, and one that I'm hanging on every word again, because yeah, for me as well, waiting for that potential pullback, but we'll see if it happens to emerge. But Michael, great to get your insights to start the week. Really appreciate them as always. Michael Gable from Fairmont Equities. We'll talk to you very soon.
Thank you.
All right, well, we're about to hand over to the Startup Daily team. However, we may as well just quickly check the local market, see how it's faring. And well, we're flat for the session, it would seem. And I'll just see how the ASX 300 is looking by comparison. And it's basically the same. So a bit of a bounce off the day's lows. It will be interesting to see how we track into what's a pretty risk-laden week, actually. A lot of US corporate data out, which could really move the dial, as well as some economic data here and abroad, which will give us a better picture on that inflation outlook. So we'll keep following that, but it's flat for the day so far. And well, of course, we'll be able to pick everything up when we start the pulse in about half an hour's time. But for the trade, that's it for today. Be sure to tune in tomorrow. We'll be back with more trading action. Thank you for watching.
The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.